Just let's look at markets and what do we have there. We started gap down, that's okay. And after a gap down start, we don't have a real trend in sight. So let me just try and look at the sectoral movers just to establish for our viewers which way things are moving in terms of individual sectors. There you go. The headlines are all sectors are trading with a downward bias. The metal index has taken a knock of about 1.7%. That's courtesy steel. The bank nifty is down by 1%. Auto index is also down by 1%. And the bad news here is the small cap index, which has also fallen today in line with mid cap index or the large cap index. So the market breadth is looking slightly shaky. Ashwini, for rest of the day, let's say till about 2:30, 3 o'clock, if Indian markets stay in and around 5200, would you then advise our viewers to go home with long positions?
See, the point is it's extremely range bound. So while you could have individual stocks where you could take long positions, the index most likely is going to chop you up. Broadly 5170, 5180, around these levels is the low. 100 points higher is the high. Unless we break down from this range, I don't think you can take real big positions. Still, as long as this range remains, play with individual stocks. That's much better than trying to play on the index.
Metals are the weakest link right now. So you've got Sterlite Industries, which is down 2.5%. Hindalco is the other one. Ditto is the case with SAIL, JSPL, as well as Tata Steel. Nitesh, what would you do with some of these names? And is there scope to short the metals back further?
I think I'm looking at that possibility. I think Hindalco is definitely looking a weak stock. It gave a very weak bounce back along with the Nifty, and I think it's again started to fall below the key short-term averages. I think that's where I am focusing upon. Sterlite is also looking weak, but I think in comparison, I think Hindalco is a weaker chart. So possibly once it starts trading below levels of 114, I think the stock should at least test the recent swing lows of 106 on the downside. So. Keeping that in target, I think that's a stock which I've identified for going short in the next few days.
I want to check on Malia Group companies. Now, United Spirits appreciated on strong volumes on Thursday, and post numbers, brokerages have upgraded their price target for United Spirits. So, there is some consensus going on United Spirits, but United Breweries and then United Brewery Holdings, they both also have appreciated. So if I look at United Breweries Holdings or UBH, it's at 95. Check on the volumes, 1.6 million shares, 1% up. This stock or this company is the holding company for the Malia Group, and they also have a large exposure to Kingfisher Airlines. So I have a sincere request that for those who think that UB Holdings at these levels is offering a lot of value, well, think again, because if you buy UB Holdings, you also would be buying 30% exposure to Kingfisher Airlines. So if United Spirits is moving up, that's a different kettle of fish. But UB Holdings, nearly 90% of the promoter holding is pledged. So if things turn around for that stock on the downside, it really could get ugly. Having said that, Satyam Computers, now Mahindra Satyam, that's looking strong. 89 rupees for Mahindra Satyam. Ashwini, Mahindra Satyam has been a marked outperformer. You like that stock. Do you think for rest of the day or maybe for rest of the month, the stock is capable of outperforming markets?
Well, so far it has been extremely range bound, and mid-cap IT overall there seems to be some flavor around it. So, I'm looking for this 93, 94 zone to get crossed, because a big medium-term consolidation would be over at that point. I don't think buying it right here is a really bright idea. If you have to buy it either above 93, 94, or if for some reason it falls back towards levels of 70. This is, really top of the range, and if somebody got in around 60, 65, probably good levels to take some profit off.
FMCG/agri consumption is the theme which is looking strong today. So Ruchi Soya is one stock which is holding up. You've got some traction for Balrampur Chini, Colgate, and of course Jubilant Foodworks as well is the one which is holding up by about 0.7%. Mitesh, anything that you're liking out of the agri/sugar space, the likes of a Ruchi Soya or a Balrampur Chini?
See, I think, in fact, we have had a intraday buy or short-term buy kind of call on Jubilant Food. While the broader structure remains weak, I think this is a stock which is corrected from levels of about 1250 to sub 1100 and is giving, coming out of oversold levels on the intraday charts. I think that's where some kind of strong bounce back is happening, and possibly, I think this could take it to levels of about 1150 to about 1155. So, for a very short-term play, I think we have taken some kind of a contra call over here. The other one is Balrampur Chini. The structure was slightly negative last few days, but it's just managed to bounce back above the short-term averages. That's positive. I suspect, if the stock can hold on to levels of 56, 56.5, I think we have a possibility of retest of levels of 60 to about 61 on the upside.
Videsh, thank you for those trading ideas and thank you for your time. FMC, the regulator which controls commodity markets, they have moved in and they have increased margins to curb speculation on commodity prices. Manisha, I would say too late, but is it too little?
Well, sure, Nikunj, this time around you just cannot blame, as you couldn't earlier as well, on the futures market. There are serious supply concerns. We are talking about the first drought possibility in last 3 years, and that really is supporting the commodity prices, or rather the agro commodity prices. And sugar, even as you were talking earlier in the morning, there has been an increase on the margin by 10%. But if you look at the sugar opening prices today, it again has gained up by nearly 1% on the opening trades itself. So after 6% of gains in last 2 days, it's 1% up again, yet again, even if with those increased margins that you have seen support continuing in case of sugar. Well, remember, we have been talking about the sugar production in India has been revised down. Ditto has been the case with Brazil. The weather is not favorable, consumption is high, and the festive demand is around the corner. So sugar prices have continued to be on the higher side. Ditto, the same case across all of those commodities. Even as you have to pay 40% margin to trade in many of these other commodities, like soybean and turmeric, even then the prices have opened on the firmer note today, 0.5% to 1% on the higher side. As you can see, most of these commodities have opened up. Ditto is the case with wheat, up nearly 10% for the month of July, but we have seen continuous gains coming in for that one as well. So I think there are these concerns about how the Kharif crop or the going forward Rabi crop could be with these kind of monsoons or drought situations. The agri commodities really are looking at a bull run.
Okay, Manisha, let's take that perspective forward. Birren Vakil, commodity consultant at Paradigm Commodity Advisors, joins in on the phone line. Birren, hi, thanks for taking time out and joining in. How would FMC's steps actually help ease concern for the commodity space?
In the wake of drought story, the way things are unfolding, especially things are quite worrisome in Gujarat and Rajasthan. So these moves are preemptive kind of things, and I think FMC is in the right direction because they are very concerned not to recur the previous episodes like Gawar or Shah or Mustard speculation or concentration of speculation or squeeze. So they are taking these steps. But I think some of these stakes looks too stringent, especially in case of terminal, where I think margins are too high and it impairs liquidity.
Right. Birren, very quickly, every time when regulators have increased prices, we've seen the underlying asset price or the underlying securities price, it always comes down. But even though FMC today they have increased prices, sugar prices are up 1% and corn prices are also up by 1%. Why is that?
I think turmeric prices are still looking relatively undervalued from a historical perspective. But most of things what I've been observing is in many farm commodities, crops are kept in cash carry arbitrage, and cash carry return are too lucrative. In some cases, yearly 40%, 30%. So I think there is one area which is causing supply constraint and need to be addressed.
Okay, Birren, appreciate you taking the time out and joining us with that particular perspective. Still down for the markets, 1% lower in trade right now. Now we're well below the 5,200 mark for the Nifty. Let's tell you what the brokerages are saying though this morning. In Macquarie, they've maintained an outperform rating on Glenmark but have upped the price target from the earlier 455 to now 500 rupees on a 12-month basis. They say that they now value Glenmark Pharma at 20 times FY13 EPS given the improved balance sheet and comfort on execution. They expect a 29% upside from the current levels and say that the niche product launches in the US and margin expansion are going to be the key catalyst for Glenmark going forward. UBS meantime has upgraded IVRCL to neutral from the earlier sell. The change in stance is largely due to sharp correction in the stock price in the last 3 months, and they feel that valuations are supportive and downside is limited from here onwards. UBS though has revised down its earnings estimates and lower execution and margin and has also cut the price target from 70 to now 50.